Thank you. Thanks for the intro. So I feel lucky to be moderating such a great panel here. Excited that we've got this inaugural event in Scotland, so I think that's amazing that we're moving things kind of around the world. And I think our topic is really good, both from a technical and, a developmental and just a philosophical perspective. I think philosophically, we thought that there was some democratization going on, when leveraged buyouts started, when real estate investment trusts started, when other types of advancements in the financial markets allowed people to kind of break into the boardroom and have people who were investing in things actually have a say and control in kind of what they were doing. Now that we're in this world that we couldn't see, right? The rate of change is rapid. We've gone to what we thought was democratization and kind of looked at it and said, well, maybe it was more of republicanism, where we're delegating our ability to do something to someone else, but who advocated on our behalves. Now I think we're at a real democratization point, and I think that we have a great panel here to discuss these things. So, I think to begin, it would be great to start with Stuart, who has a company that tokenizes a variety of types of real-world assets, and kind of ask him about how technology enables the tokenization, kind of like what's been your journey, and that kind of thing. Before we start with that, I'll do a quick round of who everybody is. I'm Mark Ferraro, FMM Capital. I have a family office. I do a variety of things: operational consulting, revenue operations, and have been in and around blockchain for quite some time, and I'm deeply involved in AI as well. So why don't I let everybody introduce themselves?
Thank you. Hi everyone, I'm Shirly. I'm originally from Estonia, which is a country that has been using private blockchain since early 2000s, and I've been in the crypto and Web3 space for the past 7-8 years, mostly based out of Zug, Switzerland. And my journey started from crypto mining company, and later on I built up another layer one called Velas for 4.5 years. And now I've been 11 months with Partisia blockchain, which is a layer one, but we also offer privacy computation for other protocols. So we have this on layer 2, and it's a regulatory friendly privacy computation, which is extremely crucial when we're talking about real world solutions and as well as real world assets that are involving data and the usage and share of data, and sometimes it might be confidential. You cannot share it on a public permissionless ledger. So we're offering a solution for that, and we also have some considerations for interoperability and scalability, which can facilitate real-world asset tokenization.
Hello. Sorry. I'm Nathan Powell. I'm the CEO and founder of Demarket Making. We have the most accurate corporate bond pricing AI, and I'm looking to tokenize corporate bonds. So that's why I'm interested in real-world asset tokens. And so anybody who wants to partner or co-found that project with me, I'm interested in talking to you. So thank you.
Hi everyone, I'm Stuart Morrison. I'm the founder and CEO of a company called CryptoSnack. We're involved in a few different industries inside crypto: sports, iGaming, real-world asset tokenization, and payments. We believe mass adoption will be driven by tokenization, and that's why we're focused on it.
Hi everyone, my name is Laeeq Shabbir. I'm from EY. I lead up the practice for anything and everything to do with digital assets. I'm deputy to the whole Europe and EMEA assurance blockchain practice. Do lots of things: tokenization, crypto, blockchain, but key focus for us is to provide trust in the ecosystem, so that there's wider adoption in the market.
Great. And I'm going to circle back to the question that I prefaced with Stuart, who's coming home to Glasgow here to help us kick this off, even though he lives not here now. So, just to reiterate, maybe you could tell us a little bit how the blockchain technology enables tokenization of real world assets, and some of the types of assets that you guys are tokenizing, and how your company's engaging the market.
Yeah, currently, we're tokenizing real estate. We think, obviously, cryptocurrency, we need to get mass adoption, we need to get people in, we need to get people using it. We think tokenization, tying it to real assets, using these assets to provide income with tokens, we think that's a key driver for this. What we do is, obviously, we're tokenizing buildings specifically that have long-term yield. They provide income. We are working with a company that's tied to the UK government. The contracts on the buildings are tied to the UK government, meaning they have a long-term yield, 25 years. So we are positioning it in the market where that we can say, if you buy a token to this building, you'll have income for the next 25 years because it's backed by the UK government. It's in a regulated market. You're getting the best of everything. Like, you're getting a DeFi product, which is regulated and backed by the UK government, but it's on blockchain. So for us, we think that's a really, really unique offering. Like, tokenization in essence is fractional ownership. And if we can provide that to retail investors, especially assets like the ones we're talking about, which are primarily reserved for institutions, the biggest buyer of these assets in the UK is pension funds, insurance funds, Aviva, Canada Life. If we put it on the blockchain, fractionalize the ownership, open it up to retail investors, they get access to AAA rated investments that they don't normally get. So that's why we're focused on that. We think it's going to be one of the cornerstones of the cryptocurrency market going forward. I mean, we obviously do a lot of outreach and we listen to the market, and people tell us, like, tokenization is going to be the future, but it's too early. People want to still speculate on different coins, etc. But we are positioning ourselves. We think we're an early mover, and we think, as I said, this will be one of the cornerstones of the market going forward.
That's great. One of the questions that just pops into my head. There's two questions, and I'm going to come to you on this one. But the first thing is just like, what have you guys seen as far as like the reduction in currency friction in investing in different markets? Like the reduction in currency friction. Like I have dollars. Maybe it's pounds, euros. Are you seeing like a greater velocity in capital because of the currency friction goes away?
I mean, well, that's actually a very interesting question. I mean, why we specifically chose these assets is that they're all CPI linked, so inflation linked, so your income's protected. That's the reason we entered with these assets, is because we wanted to be able to provide to the cryptocurrency market guaranteed income. Traditionally, as I said, you eat your cryptocurrency if you want to cash it out, and you're waiting on the next run. You invest in different coins. So if you're, especially in the UK, you invest from around the world. We accept 30 different cryptocurrencies. You invest if you're in Argentina, Indonesia, Canada. Yeah, we do accept local currency UK, but like 30 different cryptocurrencies. It is obviously pegged with like pound, but obviously it's inflation adjusted. So we guarantee that you'll get 5%, 5.5% net every year, inflation adjusted every year. I mean, 2 years ago, inflation was at 7.5%. Like if you're in Canada and inflation's hopefully less than that, you get an increase of income just because the UK is running with high inflation. So I think tying cryptocurrency to these type of assets where you can play with currency and protect your income is really, really interesting, and that's what I see like huge growth potential in.
Yeah, I see that. I think the average investor, it's complicated for them to like make those kinds of portfolio plays, which you guys allow them to have access to without going to like some intermediary bank or wealth manager and that kind of thing. So that's good stuff.
No, I think, the cryptocurrency market will professionalize. There will be advisors giving you, say, like, I want to invest 10% of my wealth into cryptocurrency. Who do I speak to? Okay, I don't want to be pure speculation. I need income. If you go to your traditional investment advisor, they're going to say, okay, you should be, obviously it's really outdated, but the traditional portfolio, 40 bond, 60 equity. In cryptocurrency, it's just like, it's like the last 6 years are just to the moon, all in. And now it's like, okay, lots of people have made a lot of money in cryptocurrency. How do you protect that wealth? You cash out and buy real estate? No, you want to keep you in cryptocurrency. We want to be able to provide these assets for you so you don't have to leave cryptocurrency. That's
Yep.
what we want.
That's good stuff. So, like, you, auditing, assurance are two things that we think about in this area, particularly to make sure that the underlying asset is there. And then also the other question that kind of comes to mind is the whole regulatory environment related to what kind of an offering this is. Right, and how do we stay in compliance and give people these returns without tripping over the SEC or a number of other regulatory bodies? So maybe you can speak to that a bit.
So I'll start with assurance and then I'll come to regulation. So I think it's very important to look at what your underlying is. And underlying is not just reference to the asset, it's also the technology, it's also your wallet, it's infrastructure, security, and there are many aspects to it that need to be looked at. So that becomes quite fundamental to anyone from an adoption perspective, because if you sell the product, I mean, there was reference of Aviva, Standard Life being mentioned, right? So when you provide that product as a service or as a SaaS or any form of product that you're putting out there, often the request that comes from institution is, how can I get assurance that everything's fine? So we often come in to provide that independent view to say, you know what, things are making sense, you need to improve here and there. And that works that we've done traditionally in our financial services or non-financial services sector, but now even in digital assets. So for us, we've seen more and more demand coming through as the adoption happens, even with DeepIn that was being talked about before. Right? The same concept. It's like, how can we make sure things are fine? So that concept of assurance is manifesting in this industry holistically, and we're providing that support. Now, your second question was about regulation and compliance to that, right? So regulation, to an extent, has come out. We've seen MiCA, UK has moved forward quite significantly. But what we've done is we've gone one step forward to say and help our regulators along with the entire industry, like, for example, investment association. So we provided support to the investment association in UK to say, how could we work towards tokenizing a fund? Right? There are many components and steps to it. So we provide that infrastructure or like a viewpoint to say, how can we go forward and actually make it happen? Because the next step for us is, let's do it, right? We've done POCs, we've seen things work. How can we make it and move towards further adoption?
So you're talking about tokenizing a fund?
Yep, so that's purely tokenizing a fund. Appreciate the concept of a real world asset is a bit different, but the similar concepts would apply because you would take what you have in your underlying infrastructure and see how you can adopt it in the space of digital assets and blockchain.
Right, right. Do you, when you're doing that, there's this regulatory and compliance aspect. A lot of it has to do with tendering documents, making sure that someone has reviewed or has been given some materials or whatever. Do you envision that like being on the blockchain as well, like hashing, like your filings and that kind of stuff, the smart contract, that kind of thing? Does that make sense?
Absolutely. So smart contract, the term everyone uses is smart contract audit. It's not really an audit, it's actually a review. So do we do that? Absolutely. Do we envision that all of the information coming onto a chain or a blockchain? Absolutely, why not, right? But have we seen that adoption happening immediately? It's taking a while. But can we put things on chain as a record to say things have been done? It's like a ledger, right? It's like a storage or a database that you can have. Right. So if you put it on a chain versus any other ledger, the concept's more or less the same. The only difference is people can see it publicly, right? But then the question is, what do people need to see from a privacy point of view? To Shirley's point, or from an infrastructure that she's going to cover. Right. How do you cover or protect the information that's needed on chain to make sure people only see what's relevant? Right. So are we seeing that concept happening? Absolutely.
Yeah, for me, just coming from a traditional finance background, I see this as like a massive change that we're going to see from, reducing friction for doing transactions. where the cost of doing transactions is going to go way down. I think there's a whole broker community in New York that should be very nervous about the fact that you're not going to need to go through all these intermediaries to do your banking docs, to be able to buy things in the market without having to use an intermediary. I think it's going to create a lot of efficiencies, and I think it's an exciting part of what we're doing here. To go back over here to Shirley on the technical considerations, if you could, I think there's some subcategories, but I'll give you a general question that I'd love you to talk to, which is the technical considerations to make sure that you're compliant, and when you're doing real-world asset tokenization. Tell us about some of these technical challenges and successes and how your group engages that.
Yeah, so actually real-world asset tokenization is not a new concept. It was already in 2018 after the ICO surged. We saw the security token offerings, but the regulatory space wasn't there, the framework wasn't clear, so we're in a different stage now where we're more ready to facilitate it, and that's both from the compliance and technical side of things. So there is an association, ERC 3643, that has been building now several years a special token where you have a compliancy already built in from the smart contract level. So meaning a typical NFT standard wouldn't allow you to freeze assets or burn and incorporate the compliance, like if the investor or token holder is even a qualified investor. So all these things can be built in already to the smart contract level, and that will be the new standard for the RWA tokens and assets. So it's important when it comes to tokenizing funds or treasury bonds and so on, different financial assets. And we are facilitating it by having an interoperable network where you can actually bring also different stable coins, because you need to pay for those assets in stable coins, and also have this privacy element, privacy protecting technology, we are building out a holistic solution for RWA space that encompasses digital identity first and foremost, because you need to verify the investor or the token holder. So that's including gathering all the data and verifiable credentials from that token holder and the identity. So we actually work also with Swiss government on decentralizing the digital ID together with 2 other universities in Switzerland. So the citizens or the patients have full governance and control over the use of their data. We also have built out the payment solution using stable coins for Red Cross and different NGOs and enterprises in the pharma space. So all kinds of even the data itself can be a real-world asset, so it's a very broad term. So what are other technical considerations is having jurisdiction management, because all the blockchain nodes globally are replicating the data, and if you're dealing with personal data, you cannot replicate it in each jurisdiction. So we have a strict jurisdiction management in place and KYB for each node operator. We're making sure that no single entity holds more than 1 node, and we are geolocating all the nodes that are processing and computing on the private data. So all these technical considerations are actually dealt with, and the technology actually is there to facilitate. It's just, I think the awareness is missing right now.
Right. It's interesting to hear you talk about this, how far we've come just in the past few years. Like as you said, a few years ago, now we're in a position where you're touching on things that are, we can have a discussion on each one of those items that you mentioned, and it's pretty amazing how far we've come. Do you see any, I'm about to, ask Nathan some questions, who's an expert in machine learning and artificial intelligence. Do you see any advancements coming that are going to kind of help get to that next level? Do you see any, maybe with the AI or some other technologies that maybe allow some breakthroughs to solve any of the problems that still hang out there? Yeah.
I'm not sure, for sure, like AI and automation, it's all part of the process. But we see more emerging the like price oracles. So there is a project called Trueflation, which is bringing the real world asset prices and feeds over to on-chain projects for them to use those. And they also built out their own CPI index for UK and US, which is daily updating the records. They're using more than 30 licensed data providers and 13 million different data endpoints. So service providers like that and AI automation and AI providers are definitely helping along with the adoption.
Yeah, sure, please.
If I think just to tag into that point exactly from an adoption point of view and what change are we seeing? So there were references of AI, there was reference of data service provider, there were new concepts of digital identity, and then you say, how can we take all of that into your, almost like your existing framework that exists for massive adoption for institutions. So same points here, but now being converted into what we can do from an assurance perspective to put that out in the market for massive adoption. That's what we're definitely seeing, right?
Right.
And more are asking for that. So we work significantly and massively with all of these firms to say, how can we provide that level of trust that's needed to institution and others so that you can go and move forward. So for example, you've got your chain, you've got different nodes, jurisdiction. How do you make sure there's compliance? You know, that's just one of the many questions that we need to answer. So to your question, what's the change that we're seeing?
Right.
This ask is a big ask, and we're working towards them by working with all of these firms so that we can provide that level of trust that the public and institutions are looking for.
Right. Yeah, I think there's like there's a meeting in the middle that's happening between the innovators and the people who have pioneered this space and the large institutions that realize that this is where it's going. I mean, we could get pretty academic about the history of money, and what has value, and paper money taking over for hard currencies, and this being the next evolution of that. Where do you see the large, because you're in the middle, you're dealing with the large institutions, and then you're dealing with people who are innovating and building this. Like, where do you see the large institutions in their curve of acceptance, understanding, and embracing?
I think it's fair to say everyone's in a journey, right? So one's going to be a bit ahead versus the other, and that's cool. But the key question is, we all need to work together. We have to form a consortia. We need to be collaborative, because if we don't, then we don't learn from each other to move forward, right? So where the institution adoption, it's happening because we can see things are getting important material, and they are providing offering to their customers. So if you ask me that question, I'll give you two answers. One is collaboration in the form of consortia is massive. So working with firms, like all of them, is important because for institution, they know that technology is residing with them. So how can you take that and provide that as an output? But then the second thing is, which is an important question, is how do you make your user journey easier, right? Why should anyone take stuff in your existing rail in RW that you have and actually convert that and put that on chain and blockchain essentially? So you're tokenizing something. So the user journey becomes very important, because if you can provide that trade-off between the risks that you have versus the benefit that you're going to get for this, then suddenly people can see why we need to do that, and then user can say, you know what, I think I need to do that. Right.
Yeah, I think it's interesting when you talk about collaboration. There are some industries that are better at collaboration than others. There are some people who are like, this is all secrets and this is mine and I'm competing against you. And, just to go back to the history of money and banking, when paper money was created, and I see this as a similar breakthrough, right? Because the only value of any that you have on the dollar or pound that you have is the serial number, which can be hashed, right? So we're just going to like the next level of that. But when you look at kind of like the development of banking, I think it's interesting that like the banking industry really didn't get to the next level until they started to cooperate with each other. And they're like, you're another bank, you're my competitor, but we need to have these protocols. We need to have some kind of a reserve system, like some of these different things. And I think that's a great insight, which I think would be a great segue into talking to Nathan, who's a machine learning expert who I've known for some time and really knows his stuff. And has chosen to play in the traditional finance space. And actually, I think it would be interesting if you and Stuart had some kind of exchange here, because you're going to the traditional finance world and you're dealing with corporate bonds and you're doing real world assets, but you're going directly to the investor. I think this is a democratization that Nathan's doing that's going to collapse things where people like you are going to be working together at some point. So Nathan, why don't you tell us, just the changing landscape of traditional finance and investment in the context of AI and tokenization?
Yeah, I mean, well, with corporate bonds, the interesting thing about corporate bonds is that they are traded over the counter. 70% of the trading volume is by voice, meaning it's just humans deciding what the price should be. So there's comparatively little algorithmic trading compared to something like equities or cryptos, I'm sure. And so, and part of that is because it's very difficult to price bonds using traditional methods. Up till now, the financial engineers, they have formulas for how much what the price of a bond should be based on a few factors, and it's theoretical. But the prices of bonds in the real world don't really track those theoretical prices, and it's because those formulas really aren't taking the whole world into account like the traders are that are really familiar with the flow of the market day by day. So what we've done is actually used a deep neural network that can actually take in more information than these traditional methods. And now we have the most accurate corporate bond pricing model. And so now we're thinking, okay, so that gives you an in to perhaps tokenize it, make a token that's pegged to that price. Because most of the tokens that are really popular, like USDT, USDC, et cetera, they're pegged to assets that are traded constantly on the FX markets or on the cryptocurrency exchanges. And so that means that there's an established price for them at every instant. For corporate bonds, they're not as liquid, right? So they're somewhere, in between these more liquid equities and real estate, which doesn't trade as often. So by having an AI, that gives you the opportunity to perhaps have an oracle that will be able to fill in the price. And the other interesting element that is in common with what Stuart is doing is that there is also a cash flow. Obviously, a bond, you're getting paid interest in the form of a coupon every 6 months, and so that combined with the final maturity amount that you get at the end of the bond makes it kind of a crossover with what you're doing, I think. So.
Yeah, I mean, do you see that being a part? Like, I wonder, because I think that there's different characteristics of these different asset classes, right? And I think one of the things that's interesting about real estate is it's always been so localized, and to do a real estate deal is very kind of specific, right? And so your cash flows, you're related to your credit. The corporate bonds, I mean, it's not dissimilar. I think that the mechanism should be evolving here at some point. Do you want to?
Yeah, obviously, like in Scotland, to sell property, you need a surveyor, home report, lawyer, KYC, AML, and the process is very drawn out. Whereas, obviously, when you tokenize it, you put everything on smart contract, you do the legal work, and then someone just turns up and it's just purchased, obviously through KYC, but it's one purchase. It makes everything so much easier, so much faster. And like you were saying, we have people buying assets in the UK right now. I mean, 2 we just sold were to people in Bali. They just want to retire, and they don't want to buy locally. They don't know the market, but they're from the UK, so they're like, okay, we own a lot of cryptocurrency. I want to enter the UK market, but I want to be secure and stay in cryptocurrency and get my income in cryptocurrency. So obviously, it's a perfect client, but I'm very lucky. It's a perfect client. So
just get 10 more of those,
yeah,
right?
and they don't care where the asset is because they're not going to live in it. They just want to know how much I'll get and what's the appreciation of the asset, what taxes I got to pay. So, yeah, like this new model versus the traditional model, for me, like there's no comparison. I mean, unless it's your home to live in and you want to live in it. If it's purely investment, tokenization is definitely the way forward.
Yeah, and just talking about the different types of asset classes and just the different way that the market engages them, right? So you've got this local real estate, you're a developer or you own a piece of property or that kind of thing. And then now you've got, mortgage-backed securities, right? So you've got these huge pools, you've got these banks trying to analyze the credit risk, but they're also getting the returns. And there's a democratization there too, where people can get into things that the spread has been traditionally reserved for banks, right?
Yeah, I mean it's access.
Right.
It's like, I mean, traditionally, as you said, like if I have limited financial knowledge, I don't know how to pick up the phone to buy these assets. But if we put them on the blockchain and we make a marketplace, you connect your wallet, you make a transaction, it's yours, you get the exposure, you get the returns. As I said, that's what's the most exciting part for me, and especially like the bond market or equities. It's normally you have to go through a broker. You need and some advice, hopefully.
Right.
All cost time and money. Whereas if you do it this way, you can eliminate a lot of the middlemen.
Yeah, there's something here, I think, between the way I see companies that are paying coupons on corporate bonds, right? And really, what's the difference related to the fact that if their sales tank and they go bankrupt, they're not going to pay anymore, right? It's the same kind of credit risk if you're dealing with a piece of commercial real estate. At some point, I think that these markets will get more efficient to the average. You want to say something? To the average consumer?
Yeah, I mean, especially like commercial bonds. I mean, you have to go to the markets to get liquidity to borrow.
Yeah, right.
And you pay a premium, and they pay like if we want to go borrow from the bank, we pay the premium. And if we as a retail, who do I lend money to? Like my friends who never pay you back. There's no return. Whereas if you can be the capital market, you get a higher return.
Yeah, so here's real democratization, right?
Exactly.
Like you're getting rid of the lender.
Yeah, exactly.
Like you're the lender.
Yeah, exactly.
And
that's where, as I said, it makes it very special, and you get much higher returns. You can build your wealth much faster, and all these. They're regulated. They have to pay.
Yeah.
So you get protection, but you get the access.
Yeah, I think Nathan, you probably see where I'm going with this.
Yeah.
There's a convergence here,
Yeah.
because I think Nathan's coming down this way in the institutional side, and he's starting with corporate bonds, but I could see mortgage-backed securities being another area where he could get their predictive modeling, and I think that we're coming from another direction here. Do you want to speak to that?
Yeah, I mean, I think I can learn a ton from people like Stuart who have more experience tokenizing cash flows and real-world assets in general. Mm-hmm. And I think that for me, the really cool thing in the future is to create decentralized versions of it where you're not depending on a single issuer. So, for example, with corporate bonds, there could be a bank that has a book full of bonds, and then they want to tokenize them, and that's very cool because it opens up a lot of applications. But what would be even cooler, because corporate bonds are fungible, meaning that if you have one particular bond worth $1,000, it's the same as another one. And so it would be nice if you could not worry about who is actually holding the bond. And so what I'm looking towards in the future is the truly decentralized versions. And I don't think that problem has been totally solved. You have things like DAI, which are kind of an attempt to have a pegged decentralized token, but it's very inefficient in that you have to have a very high percentage of collateralization. So I'm looking at another model which is sort of like contract for difference here in Europe. And I wonder if that would be a more efficient way where kind of one side takes a short view, one takes a long view, and then you get paid out according to how the price changes. So we'll see.
Yeah, I think that's great. But I think that kind of addresses some of what we're talking about here, right? Because really all the bond is and you said it perfectly, Stuart, they're just going to the commercial paper market. If they get stuck, They go to the commercial paper market and they ride it out, right? And so, but underneath all that, it's the same, right? So, I could see, this all kind of converging in a lot of different ways. How do you see AI working with, some of the strategies that Stuart's talking about? Not just in the bond trading, but so like, just so that for the public knowledge, everybody talks about AI. Nathan and I have been in and around AI for a long time, before it was cool. We were early adopters. When we were still only the nerds, we're looking at it. And everybody's really focused on these large language models, right? But there's different types of machine learning. And so everybody says, these large language models do all this great stuff, but how come my Netflix can't predict a good movie for me? And that's because that's a different kind of machine learning, right? That's predictive modeling. So I think Nathan is like more on the forefront of, event-driven or time series-based, predictive modeling that are going to get better predictions for the future, as opposed to curating a set of information that we already have and serving it up to us in a way that sounds intelligent. So, how do you see that, what you're doing with the predictive modeling, helping someone like Stuart with what he's doing on the ground with his type of tokenization?
I mean, if you want to have a token that's pegged to a future cash flow, and let's say that there's a market for that in the secondary market, and you want to peg to that, then it's necessary to have a price in between the trades. So I mean, again, like an FX where it's constantly traded, you don't really need that because it's traded so frequently that you can just use that most recently traded price. But for real estate, where you're talking about tokenizing the total value of the real estate or maybe the future value of a cash flow, or a corporate bond, where corporate bonds, sometimes they don't trade for months. But even the most popular bonds, like a bond from Microsoft where I used to work, it might trade, maybe 10, 20 times a day, but that's still some big gaps where if you wanted to trade during that gap, what do? So you need an AI to fill in the gap. And so what we specialize in terms of machine learning is the large event models, which means that instead of a time series model where you're trying to make a prediction about a time slice, like the price during this hour is this dollar amount and the price of this, during the second hour is this dollar amount. Events are more about things like a trade as an event. And so given the attributes of the trade, how do you predict what the price is going to be, for example, or the probability of different price levels? And so for that reason, it's different. And the long-term vision is if you can get a large event model that has been trained on a lot of different types of event streams, then it could work properly on an event stream it's never seen. Similar to how large language models, they can work on tasks that they've never seen before, just given a new prompt. And so we want to do that for events. And events, obviously, that's applicable to so many things.
Yeah, so almost like humans do.
Exactly.
Better.
Yeah. I mean, the human traders in corporate bonds they're the masters. They're better than our models, and so we need to learn from them.
Yeah. I think we can learn from both of it.
Yeah.
So look, I mean, I think we're wrapping up here, and I want to be sensitive to the time. We've got a minute left, but I just wanted to say that for me, I'm really grateful that I am a guy who gets to sit here and ask these super intelligent people these questions and learn, at an event like this. So I want to, thank the folks at BlockStart, Colin. This is a great curated event so far, and I'm really grateful to you guys for answering our questions, and look forward to continuing the conversation throughout the rest of the conference. So thanks everyone for your time and interest. I've got a minute if anybody's got a question. It was pretty technical up here.
No, we joined one Ocean Point. Obviously that's the biggest question we get asked. Okay, I keep this asset for a year, I get 12 months of payments, now I want to sell it. Where do I go? So that market is not liquid. It takes a few days or weeks to sell. But you basically put an order and say, I want to sell this token, this is its value, this is its return, and then people come in and buy. But it's not liquid. Well, I mean, like right now, obviously, we're not promoting it to people that don't want to hold it for a long time. Like I said, the two guys that bought two buildings, I mean, they're long-term holders. Right now, we're having people buy like $5,000, $10,000, and they're saying to us, okay, what's the time horizon? When can I exit? I mean, there's no, like, I don't have a crystal ball, like, that's what I tell them, but like, I say, like, look, after the next bull run, people will move from the speculative assets into like these real-world assets. They'll want some security. That's where you guys have got in now. This is where you get first mover advantage. You'll be able to sell them to these people that want to move into them. So realistically, like this now it's taken, like, as I said, a week or even a few weeks to sell. The market's not there yet. No. Each building's tokenized as 100,000 tokens. But yeah, I mean, like I said, the market is not there yet. It's not fully liquid. I mean, we believe it will be. That's why we're investing a lot of our time and money there, because we think it will be liquid.
Creates a lot of opportunity for people who want to, because it's got real value.
Yeah.
Who want to create, who want to trade and get value for making it an efficient market.
Yeah. And that's it. And we actually created a staking pool as well, so you can stake the asset and receive income, like in cryptocurrency and other cryptocurrencies, just to obviously try and bring more people into it. They're looking for more like a DeFi product.
Thank you.
Thank you so much.
That's my signal.
Yes, it is. Thank you so much, everyone, for having joined.